cryptocurrency trader and currency coach at FX Link. Thank you for joining me once again on another episode of our Forex Weekend Market Preview. And today we'll be looking at a possible counter trend opportunity on the USD yen. So to kick off things, the first thing that I'll also emphasize whenever you get on my trading channel is I also want to identify the overall direction of the market. You can see from this level of structure, this is we had an aggressive seller's push. Okay, this was a bit of a slowdown for my sellers at this point of structure, and at this point price action managed to continue to the downside with this downtrend. Now, like I said, we also want to identify the overall direction of the market, meaning is the market going up, down, or sideways. Now, how do you tell if the market is going down, and how do you tell if the market is going in an uptrend? Of course, whenever you're in an uptrend, you want to see a sequence of higher highs and higher lows. Now, in this case, you can see the price action has been violating significant structure levels. We booked this structure level, violated the structure level, and finally violated this other structure level. In my case of trading, whenever I'm in a trend continuation opportunity, this means I want to continue with the prevailing trend. Like if I say there's an overall downtrend and the sellers are in control of the market, I want to continue with the trend. I want to be on the seller side of the market. If I could grab my extension tool, my retracement tool, these are just significant structure levels to show you where the market's more likely to turn. And you can see, take a closer look, you can see that our price action has just hit our 1618 level. This is a significant retracement level. Now looking left, this is where we get our wedge pattern, just to show that back at this level of structure, this is where we have a huge imbalance between buyers and sellers. As soon as they hit our 1618, look what happens. Sellers came in aggressively to push the market back down to this level of structure. Now, like I said, I'm looking to continue with the trend. The next question will be, if I am looking to sell, at which level of structure will I be looking to sell? And for me, this will be the perfect place for me to look for opportunity. And for this, we could use right around where we had this imbalance. We could try to zone out and say this could be a nice kill zone. But of course, we can't just take a trade because we've hit in our kill zone. We're going to need many other factors in order to strengthen our case for entry. Now, in our case, I could pull out our RSI. Depends which kind of indicator you prefer to use, but in this case I will use an oscillator, which in this case I want to see oversold and overbought levels. And if I were looking for a selling opportunity, I'd expect my RSI to hit our overbought state, meaning the market has been overbought, sellers are exhausted, and we were looking for price action to at least give us another push to the downside. And as you can see, our RSI has already hit our overbought state. And our case, in this case, we kind of slowly, okay, let me drag it up. We're kind of slowly approaching our 80 mark. But one interesting thing that I can see from our RSI is this. From this level of structure, or from this level of our indicator, you can see it slopes to the downside. But if you could apply the same thing and take a closer look on our price chart, price action is at an even place. Now this is what we call a bearish divergence. Now bearish divergence, for me, I've back tested it, it's proven to be profitable and is one of my significant indicators or signs or scores, if we want to put it that way, for me to take a trade. Slowly but surely, we're trying to build a solid case for entry. We don't just take one thing and pick a trade on it. We want to see a number of factors and try to run it up and see why we should even consider taking this trade. The next thing you should do is that we have already double topped on this level of structure. Let's try to zoom in. One key thing about a double top, it shouldn't break and close above the wick of this candle, because this is our highest wick in this case. So we shouldn't have a break above, close above the wick of this candle. And as you can see, back at this level of structure, this is where sellers are coming in aggressively. So we can conclude at this point of time we already have a double top in play. So coming down to our hourly chart, just to see how do we plan on getting involved on this market, we can try to add our extension tool. So we want to see where this last move will exhaust. So from this X right back down, you see this is where we get our extension tools. And already at this point of time, price action has already hit our 1414. Now if ever I'll be looking to take this trade, so we might expect to at least to have another double bottom. Probably price action could give us another push to the downside and then really back to retest this level of strike. In this case, this is where I want to get involved in the market, and this is how, if ever I do get involved in this trade, this is how it will possibly look like. Say we have an entry somewhere at this level of structure. Okay, I'll start with my stop loss before I even consider where I'll be taking my profit. My first key concern is my risk. I want to see if I could be able to tolerate this risk. So just above, so I'll be looking to put my stop loss just 10 pips above the highest high of this week, and you can see we're risking 12 pips, so just around about 24 pips, and this will be at 113,115. And our first take profit, you could be looking to have your first take profit back at this level of structure. As you can see, this we had a nice resistance and more support, so this could be the first level that we might have a bit of a hassle, and you can look to take the continuation of this profit back at this level of structure. And looking at the trade already, you can see this is a positive kind of trade. For risking 24 pips, you'll be looking at total take profit of 61 pips, meaning this is a 2:55 risk to reward. Okay, so I'll keep you posted on this trade, guys. Hope you enjoyed. Please leave a comment below. Share your thoughts and views on this trade and many other pairs that you're looking at. Hope to hear from you soon. Please don't forget to hit the subscription button on below and get a weekly post of our market preparations. So yeah,